All right, what's up, guys? Welcome back to all the little midgets. So today's video is gonna be pretty short. I just want to go over Netflix actually, um, which was actually like fucking wild, and it's still going. So why am I on Spy? I should not be on Spy. Netflix. All right, we talked about this stock a while ago. Let me open TradingView. Netflix is at 875 after hours. 875 after hours. Not even, I want to say, not even 3 weeks ago. Okay, 2 weeks ago ish. It was at 759. Now, when we did our little video, if you guys remember, which was a week ago. Yeah, by the way, I went on retreat and like I was gone for like 4 days. That's why I didn't post. But yeah, I just do these videos just to like update myself, not really you guys. But as you can see here on TradingView, we had a few goals set in mind. And let me just show you again. If you guys want this, you can have it. I made the script myself, option strike price calculator. If we needed to go over this again, if we go to Webull, you can see the quote, you can see the range 4.1%. Obviously, this is because of these recent days, but back then it used to be like 2.5, maybe or less, like 2 something. Let's see, it was like 2.5 something. Actually, I want to see something. I just want to see if this changes depending on. Okay, no, it doesn't. What was it, like 2 something? I'll just put it 2. Okay. Back then, we estimated that it broke out here on this day. You got in, right? And your strike price would be at 840 or something. So I don't think it was 840 because I remember we were looking at 820 or some shit. So it must have been lower than 2. It must have been like 1.5 if we played like safe or some shit. Yeah, 820. Yeah, it was around there. But anyways, even if you did 2% every day, which honestly, that's doable. That's doable. That's doable. That's doable. On that day that it broke out, your strike price would be 832, 830-ish. Okay? So 1, 2, 3, 4. On the 4th day, it's at 805. You're holding it for a week. So 5, 6, 7. 7, it hits peak 840. So you're $10 above your strike price the day before you sell your options. Pretty neat. Obviously, you can trim. You can trim some what's called some options along the way or some profits, but that's pretty crazy. That it is at like if you held it for 2 weeks, basically. Held it for 2 weeks. Look, we had a price target at 815, and then our highest price target was at 835. So again, if you held it for your whole 7-day period without selling the contract for 7 days, so the moment you buy 1, 2, 3, 4, 5, 6, 7, 8, or wait, shit. The moment you buy 1, 2, 3, 4, 5, 6, 7. That is 7 whole days that it goes up 10%. 10% it went up from that strike price. What's funny is 2 times 4 is 8%. So realistically, it would have only supposed to go up. It was only supposed to go up to 8%, which is right here. Right? So you see that Netflix went a little higher. if you kept holding after your option, so like after it hits your 8% mark, after would be the sixth day, or no, the fifth day. Wait, what? 1, 2, 3, 4. Oh yeah, fifth day here. The fifth day here, it hits your, I guess, your strike price. Okay, you can sell a lot and you can go break even, right? Or put your stop loss like here, like under that high or under this low or some shit. So if price comes back, yeah, you're losing out, but you're only losing on profits, if that makes sense. You're not losing money, you're losing out on money. Get the term? So again, like this is a really good example. I'm gonna go to Webull here real quick just to show you. Netflix is a company I've been investing in my game for a while. You can see when we go to our game here, Netflix is one of the first companies I bought, and I bought it like I bought it back like during this whole era, like down here. It spiked down and then it went spiked right back up. But I bought it like in this area, like right around like 705, 706. I remember that. I gave a presentation on it, like 705 ish. Okay, it went down. I remember the exact day I was visiting Babson for college. It spiked up to 763. I told my dad, I'm like, holy shit, this is crazy. We're gonna make so much money in the game. Blah blah blah. And then guess what? I flagged this. I flagged it. I put it in my setting up because guess fucking what, bro? It's Netflix's market cap is $372 billion fucking dollars. Its average volume currently is 3.8 million. This is a very tradable company. And like I said, Netflix is volatile. You just look at the days. It goes up, it goes down, it goes down, it goes up, 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 it goes down, 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 it goes up, down, down. It's all over the fucking place. And it will lose percentages in seconds. But it can also gain in seconds. So, flip side. Anyways, Netflix does this huge move one day. Obviously because of Q3 earnings, so their revenue. Obviously they beat it. And it goes up. And with big corporations, look at this. It goes fucking sideways. It just goes straight sideways. It comes down, and it starts going sideways. And then look at these EMAs. I'll just remove these, right? You can already tell if I just draw a line like that. Like, isn't that a little obvious? The candles get shorter. The candles get thinner. And this is beautiful. I mean, like, the volume here that you get spiked. Obviously, it dropped. And then it just kind of keeps dropping. Yeah, there's some spiked volume here and there. It just spike. And then on the day of breakout, on these 2 days, there's a lot of volume. Which is pretty neat. And before the breakouts, there was 3 thin candles. 3 consecutive, thin candles. Then you pull up the, I think the EMA is better. So EMA or MA, prefer EMA. It touches the EMA once, twice, boom, and then once it hits the MA, boom, right it back off. And the MA just kind of, it's sat on it. And then VWAP is in like the 1 hours and shit. But that's Netflix. If you held this contract, by the way, which hopefully I have the video. Oh yeah, I do. Who knows? I don't have the sound, unfortunately, because my headphones like died. A little bit more. But you can see. We were looking at 820, 830-ish, right? You can see, go back to the options. Exactly what the contract's price. No, where's mid? You can see we're looking at 815, 820, and maybe 830, right? So in that range for 15 November 25. Let's mark this down real quick. Just to give you a quick understanding of like how important this is. Let me pull up a new sticky note. All right. So 15 November. We were looking at 815, which was sitting at 390. Or no, actually, what's the mid price? 412. 412. And then we'll go to 830. 830, which is sitting at least at mid is 168. Okay. Now let's currently go. Obviously, the only one we have is 22 November. So from that, It's only 3 days apart. And now we're on the 22nd of November. In those contracts, which obviously now are expired, but you can see the contracts, how much they would have gained, are completely in the money. So 815 or 815 now, if you held for a long time, is currently at 57.48. And 830 is at 43.10. That's pretty impressive. That's wild. That's actually fucking wild. Yeah, that's wild. Actually, I wonder if I can calculate how much money you would have made if you just held the thing. Basically, you're at, this would be 400, so this is 5,000. So it would be $5,748 minus $412. So you would have made $5,000. Oh my god. You would have made $5 fucking grand. Which, by the way, if you invested just one contract, okay, if you do 1x, so one contract equals $412. Okay. Well, I mean, that's like, that's 1,100 something. No, it's less than that. It's like 1,070%. So if you held, it'd be 1,070-ish percent. Let me just do this. 1,000x percent. Isn't that fucking wild? You could have turned $400 with an 815. Now the thing is, it's not really five grand, because again, I'm doing this math kind of weird, because this current contract, you would have had to buy it, I guess 2 weeks. So like, think of, I'm confusing myself here, but think about when we were back here buying the contract, we would have to have 22nd November, and this would be like 17 days out, if you will, right? And so now it's at 3 days because the time elapsed. But that means that if it was at 17, the contract prices would be different. When we looked at the contracts here, it was the 15th November. So the contracts were maybe a little cheaper, maybe a little more expensive. So I'm going off this one, pretending that it would last longer and just showing you the potential. But either way, I'm still realizing this. Either way, if you're making, if this one is 1,000%, this one 4,000 minus 100, almost 200, like that's almost even better. I mean, like 830 now, like that's wild. Look, $178, or you do 4,000. Like, look at this shit. Where's my calculator? That's not even, that's crazy. I mean, that's more than 1,000%. Look at this. You do 4,310 minus 168. That is not even like 1,000% for $100 is $1,000. This is 4,000%. 4,000 fucking percent. You would have like $400, or no, $168. That's like, dude, if you're working, you make that, in like a month, bro. You put that $168 and you make 4 fucking grand. Okay. Now, 4,000%. Okay. Hypothetically, let's say you put in, I don't know, let's say you put in how many contracts we want to do, like times, I don't know, you want to put in $1,000 on Netflix, or let's do $500, okay, or times 5, okay, so, or maybe it might be a little more, right? So 168 times 5, you put, okay, $800, maybe not, let's do times 3, that should do it. 168 times 3, right? 504. Okay. And then you do that 4,000%, so that you made $5,000. No, I'm stupid. That's 1,000%. So 4,000% on $500 is, I think I'm stupid. Hold on. Let me just multiply by 4,000. That should give it. Yeah, you made $2 million. No, I'm joking. So how do I do this? Divided by, or times 0.4 or some shit. I don't know. Fuck. Well, 1,000% for 500 is 5,000. Then 2,000 would be 2,000% would be 6. You've been making almost $8,000 or $500 if you did 4,000%. That's wild. You put in your $500 paycheck, whatever, and you made $8,000 off Netflix. Now, the reason why it spikes so much and the reason why there's so much news on it is because of the Jake Paul and Mike Tyson fight. If this didn't hit these highs at 874, you'd be stuck at 840. Big difference, by the way. This is a big difference. And big, when options love when the stock just pumps, right? That's when the options, IVs, and everything gets crushed, and everything just goes right up, and you make a fucking shit ton of money. It also goes up over time, when the stock goes up, but it goes up a shit ton when it pumps like this, right? Like these 2 days are what made people make $8,000 off $500. Now, I forgot to get in this on my account. But for example, if I put $80, which is what I probably would have put, and you put that $80, right? 100% is $80. 1,000 would be 800, right? So you put in almost $100, and wait, no, yeah, 1,000% would be 800. So that's wild. I mean, perfect setup though. But anyways, I'm getting bored, so I'll talk to you guys later. Peace.